Hi guys, this is Sam from CryptoDataAPI.com, and in this video we'll look at why your AI is trading blind. So I'll take you through three things. First, we'll give your AI real-time live market data with one simple command. Then we'll look at 10 amazing prompts that you can simply copy and paste and run today. Also, stay tuned for that, guys. There's some really cool data coming right up that's going to help you build profitable trading strategies. And then finally, I'll show you how to generate unique trading strategies using nothing but your AI terminal and the Crypto Data API MCP. As always, guys, this content is free, so to make you a better trader. So let's get straight into it. So before we see the magic happen, we need to understand what the problem is. So the problem is your AI has no idea what the crypto market is doing, really. So when you ask ChatGPT any trading question, it will appear confident, but it's trading blind. I mean, you could say pretend to be an analyst. It can't see the current crypto market regimes. So for example, is it in a bull run, bear market, sidewards, or squeeze? Can't see the funding rates, the liquidations, the order books, liquidity, well positioning, market volatility, and the list goes on. So let's look at 10 prompts that I've constructed that are each wired into the live real-time market data to give you reliable signals for your trading strategies. The first step is we need to connect our AI terminal to the Crypto Data API MCP. So if we head over to CryptoDataAPI.com website, and at the top we click Set Up Crypto Data MCP, so we click that copy button. Then we'll paste this into our terminal. So then to connect the terminal to the server, we'll type in /MCP, select Crypto Data API, then click Authenticate. This will open up a browser window, which will let us log in to connect the AI to the MCP server. See authentication successful, and we can now connect it to the Crypto Data API. So what we'll do is we'll just ask a quick question to see if it's connected. So what's the price of Bitcoin? And you can see it's responded with the Bitcoin price is trading at 62,842. And let's get started with the more advanced queries. The 10 free crypto trading prompts for AI agents. So first we'll read the market by detecting some market regimes, funding rates, and whale positions. Then we'll decide what to do. So we'll pick up the bot entry signal evaluators. Then we'll size it and guard it. So we'll look at volatility aware position sizing and autonomous risk management. Then we'll look at how we can execute orders and build some alerts. So we'll put together an execution controller and a Telegram alert agent. And all these crypto trading prompts are free, and they all work with ChatGPT, Claude, Gemini, and the AI agent that supports MCP. So let's grab the first prompt. So if we head over to the Crypto Data API website, go to Resources, AI Prompt Library, and then we'll scroll down to Market Analysis. And the first prompt we'll run is the market regime detection. And basically we start here because it sets the context for everything else. The regime just means what kind of market you're into. Is it bull, bear, trending, ranging, high volatility, etc. And this reads directly from our back-end quant engine, and which runs off a hidden Markov model, which labels all the current regimes with a confidence score. So when your agent checks it first, it knows what game it's playing before it does anything else. So if we click on the right copy prompt, and then we paste that prompt into our AI terminal, so we can see the AI has fetched the live quant market data from the Crypto Data API. And the current short-term regime that we're in is a range to low volatility regime with a confidence score of 0.975. The directional probabilities are slightly flat. The volatility is slightly low, which makes sense. The liquidation risk is slightly low also. And then the transition to the next regime from the current one is likely to be 43% likely that it stays in the same regime, and a 22% likeliness that it goes into a squeeze market. Then it also runs a Monte Carlo simulation, which calculates 1,000 simulations over the next 24 hours and will give you probabilities of volatility spikes and percentage of a plus 5% drawdown, which is useful to know because if this is quite high, it can affect your trading and you can get squeezed out. And then it gives you an analysis here. So this will give the AI its playbook. So it will say, oh, this is the current regime. So this is how you sort of trade it. And these are the sort of characteristics of this regime. And then some nice little spark lines here. The next prompt we'll run is a funding rate extremes scanner. So this, when we run this, it will surface the coins whose perpetual funding has gone extreme, flagging crowded, and then over leverage positioning that often proceeds to squeeze. And this can then inform our trading strategies to take advantage of this. If you're not sure what perps are, so it stands for perpetual coins. For example, they run on Hyperliquid. So if you see Hyperliquid perps, that's essentially the same as options, but the perps have a funding rate. Now, this funding rate can be positive or negative, and what it does is keeps the price of the perp linked to the spot price. So we'll click copy prompt. Then we'll paste that into our AI terminal. The data returns live from the API, and it shows all the perps with extreme funding. This scans every perp for funding that's running hot, which could be an indication of the crowd piling into one side with lots of leverage. This also has a tendency to snack back hard. It's a rank list of the most crowded coins right now, so it can fade the herd or even stay clear of it if it wants to. And if we take a closer look at the data, we can see that the coins with the highest funding rates at the moment, there's the Hypercoin, the Kato, and Pump. And then it shows which way the crowd is sided, so mostly longs. And it shows the open interest and the squeeze. And then it gives more information below. So you can see it gives this nice little sparkline graph and shows that these are the coins that are long crowded and these are coins that are short crowded. And a nice little summary at the bottom saying the positioning is pretty calm at the moment, which matches the regime that we're currently in, the low volatility range. The next prompt is the Open Interest Divergence Scanner. This allows you to find coins where the price and open interest are diverging. This reveals the conviction behind a move from fresh money trends to hollow short covering bounces. And this is useful for breakout and momentum-based strategies, confirming a move has fresh money behind it before you chase it and filtering out the bounces that fade. So we'll click copy prompt. So we pasted in the prompt and we see the data has come back from the API. And from this data, we can see the open interest on ETH is increased in the last hour by 3.27%. And that's obviously new longs. This indicates that clean, fresh money is coming into Ethereum. And we can also see here the open interest divergence in the last hour, which coins got new longs, fresh money coming into longs, and which coins have got fresh money coming into shorts as well. And that's how that's affecting the price. The next prompt is called Whale Positioning Monitor. And this can be useful for our trading strategies because we can follow where the smart money is going. It pulls the aggregate long versus short bias of all the Hyperliquid accounts that hold over $100,000, i.e. big money whales. And in one API call, your agent can see all the ways in which the big money is leaning towards. So we'll click copy prompt. And if we take a look at the whale positioning that's came back in the live market data, we can see that it's monitoring 2,682 accounts. And these are the accounts on Hyperliquid that have over $100,000 in them. And of those accounts, it's labeled 171 as market makers, 133 as whales, and 2,380 as other. We can see that there's a very strong conviction on Bitcoin and both having large net amounts on the long side. And then the rest of the other coins are mostly a negative positioning on the whales. So this can help us with our trading. If we see which coins are positioned by the whales, we can track their movements. And as they flip from long to short, we can then use it as a directional influence on our trades. This next prompt is the MCP Market Analyst for Claude Desktop and Cursor. So this is the MCP tool that is being used as a live crypto analyst. You can ask it anything and it fetches the live market data from the API to draw its conclusions. So for example, we could ask it, is the market risk on or is the market risk off right now, and why? It will pull the regime, funding, and liquidations together and determine the reasons for why the market is in that regime all over one API call. As I said, it works on Claude Desktop, Cursor, and any other MCP-enabled client, and is a useful tool for the research layer on any trading strategy because it can do ad hoc analysis, discretionary check-ins, and you can wire live context into an agent's decision steps. So let's copy this prompt and see it in action. Let's take a look at the data we received from the prompt. We can see we have this nice table showing the analyst criteria. So we have the market health sitting at 28 out of 100. It's currently a bearish market, which is true. Then we have the long-term versus short-term, also both bearish scores, with the short-term being slightly higher, showing maybe a little bit of short-term momentum upwards. We then have the market breadth. So we have 13.3% of the coins above their moving averages. That's the 200-day moving averages. And then we can see the fear and greed index, which is currently 24 extreme fear, which has been like that for a while. We can also see the funding rates, and we can see the open interests. We can see how that's rising. And we can see the positions of longs versus shorts. And so we can see that the top traders are long net into weakness. So this gives us a snapshot of the market, which our bots are able to read in real time. And then they're able to see which way the market's moving and able to steer our trading strategies. This next prompt is called the Volatility Aware Position Sizer. So once you have a trading signal, you have to size it correctly. The size of every position can be inversely related to its volatility. So what that means is your risk per trade stays constant. A stop hits for the same dollar amount whether you're trading Bitcoin or whether you're trading a microcap. This is useful for risk management in any trading. Volatility you're targeting and the risk parity sizing keeps every trade risking the same dollar amount. So the data returned from this prompt uses the example of trading 1% of your capital per position. So a total balance of 25,000 would give you your risk dollars of $250 per position. The RV24 is the intraday realized volatility percentage, which shows at 1.71%. So this is a medium sort of volatility value, whereas if the volatility was higher, we might size the position down. And if the volatility was lower, we might size the position up. And there's also some other really useful metrics on there that you can use, like implied leverage and your target volume multipliers to suggest your notional position sizing. This next prompt is called the Autonomous Portfolio Risk Monitor. So risk monitoring is an essential part of any trader's arsenal. This one raises its alert level the moment the regime, liquidity, fragility, and liquidations line up against you. So your agent de-risks before a cascade, not after all the positions have stopped out. It is super useful as the safety layer for any automated trading system, and it acts as a portfolio level kill switch, which is essential to have. If something goes wrong, then you can preserve your capital and stop your account from blowing up. We can see from the data returned from the API that the risk level is currently amber with a fragility score of 48.8 out of 100. So this is a sentiment neutral score and in the amber band of 40 to 70. We can see the liquidations are one-sided, so 119 million longs versus 53 million shorts. So that's 69% on the long side of liquidations. We can also see that their current regime is a range of low volatility, and we can see that that's confidence of 97%. So we're not in a risk-off environment. So basically it's telling us these signals are elevated, but there's no danger. So if the regime was in a volatility spike or a squeeze, there might be a bit more danger to our portfolio. At the moment, it's telling us to edge on the side of caution and trim some positions and some leverage, but there's no like immediate danger. And we would then use this monitor when this regime then shifted from, say, amber to red alert, then we may close our positions to protect our account. This next prompt is called the Regime Aware Execution Controller. So when it's time to place a trade, your AI can adapt the order type and aggression to the live regime and the order book depth. So it's patient in calm markets, and it can be defensive when liquidity thins out. And it's the difference between getting filled or getting run over. So it's useful for execution strategies, cutting slippage, whether you're scalping or whether you're working with a large position into a thin order book. This definitely can help you. In this example prompt response, we're trying to trade Bitcoin, and we can see that the regime is calm, the volatility is low, and Bitcoin's order book is tight. So the AI would then read all this data and analyze how aggressive it would be when placing the limit orders. And you can see in the current market regime for Bitcoin, the aggression would be passive. And this is like super useful to know if you're an AI trading bot. The next prompt is a Telegram alert agent. So this agent turns any exchange flow spike and sentiment extremes into push ready alerts sent straight to your Telegram channel or Telegram bot. Your agent can run headless and still tap you on the shoulder the moment something real happens. This is super useful for event-driven and discretionary trading, catching flow spikes and sentiment extremes, even when you're away from the screen. We've run the Telegram alert prompt, and the output here is showing that there's no alerts currently. We're in a calm market regime, still in extreme fear, but there's no triggers firing. And you can see there's certain triggers that it's watching. So it's watching the flow of stable coins. It's watching the liquidation risk of coins. It's watching the pumpability of the coins here, and the regime flips and the sentiment, which we just mentioned. So overall, there's nothing in the market that's concerning, but we'll keep our eye on it. And if anything, we can then program our agent to let us know if anything changes, or obviously we can automate these values into our trading agent. And so they send the alerts directly to our Telegram channel. The final prompt in this series is the strategy hypothesis generator, which connects directly to the live market data. Then it proposes some testable strategy ideas that you can actually backtest. This is useful for systematic trading research or turning raw signals into concrete falsifiable strategies that you can run for a backtester before you even risk a single dollar. As you can see, we've run the prompt on the AI terminal, and it's generated 3 strategies for us. And these 3 strategies are based off 57,000 hours of live market data from 2020 to 2026 today, analyzing all the market regimes and their hourly stickiness. The first strategy is a squeeze maturity to volatility expansion delta neutral long gamma. Bit of a tongue twister there. The second strategy is a regime persistence trend continuation with symmetry check. And the third strategy is a range mean reversion via crowded funding strategy. So the table shows the 3 strategies: the hypothesis, the trigger regimes, and the key fields that you would like to run on your strategy backtester. So before you go, remember your data is the edge. So what to do next is to head over to cryptodataapi.com/prompts and play around with the prompts. And then also the prompts are available on the GitHub repository, which the link is on our website. And any PRs are welcome. You can grab a free API key, which runs most of the prompts. There's also a pro data subscription for the more advanced traders out there. And the first 10 signups, we're offering 20% off. So you just use the social 20 on checkout and you'll get that 20% off the subscription. Thank you for watching, guys, and we'll speak to you soon.